look at the people who are sitting here, right? So we have Anil. So most of you know Anil. Anil has been around in the ecosystem as an investor for quite a long time. So he has been instrumental in almost 100 fundings. So that is well experienced, been here, done that many times person. So he has been involved with Mumbai Angels, now running Unicorn Ventures. So now we have Mayuresh, who's representing C Fund. So Mayuresh, again, a seasoned professional. I was looking through the LinkedIn profile of Mayuresh, and I found a striking similarity. Mayuresh joined college in the same year as I joined kindergarten. Okay, so that is Mayuresh. And Varun, he doesn't need an introduction here. Varun, been in the industry for a long time, working with a lot of big brands and companies out there. Start off his company, Corporate 360, a few years back. And we know the story, right? Corporate 360 is one of the role models for almost all of us. And here I am, the most inexperienced person as the moderator of the panel. So first of all, I thought it doesn't make sense at all. But then when I read through the topic of this, I thought, yeah, now this makes total sense. This is all about how these VC folks and these investors find us, startups, and select us. So I thought it makes total sense to be representing you guys. Most of you running a startup, looking for investment, asking the questions that you guys want to ask. That's my job here, right? I have been working a bit to find out all the questions that you guys want. I circulated this question in some of the forums and some of the WhatsApp groups and got as many questions as possible. So all I'm going to do is ask your questions, right? So jumping in straight, just to get an idea about the audience for the sake of all the panelists, how many of you are running a startup at the moment? Quick show of hands. How many of you are looking for funding? Let's not do that. Let's clap. Let's applaud. How many of you are looking for a funding? Okay. How many of you have been rejected by investors? Clap. Okay. Feeble. Others, maybe you have not tried enough. Because if you have tried, you will get rejected, right? Okay, jumping in straight away. Let's first discuss a bit about, I took the privilege of introducing you guys. So if you can take 2 minutes, introduce your fund and the investment activity. What is the kind of startups you're looking at? What is the stage at which you invest, etc. In just 1 or 2 minutes, that'll be helpful.
So my name is Mayuresh Raut, and I represent C Fund. We are primarily Bangalore-based, but through our networks, alumni and professional, basically the world is our playing ground. We operate in what we call the seed or angel stage, but we can go as high as up to any pre-Series A stage. The size that we can't be anything other than sector agnostic. Two investment principles that thesis, if you want to call it, that we follow is we would like to give, and first of all, I start from the investors side of things. We would like to give a platform for investors who want to get a piece of the startup story. So we are clearly not as big as some of the other funds in the market, but if you have a certain investable surplus and you're looking for some portfolio diversification, then we provide that ticket size as an option for you to invest in a seed fund. As I said yesterday and say it today again, two options are investing: do it yourself or leave it to the professionals, and we believe we solve that need. As far as where we invest, the size that we are, we can't be anything other than sector agnostic. We have to have as many shots on the goal as possible, and we are pretty happy with the kind of stance that we have. Having said that, the three of us and our networks have worked for several years in specific industries. So hardware, IoT, healthcare, niche e-commerce, fintech, medical devices. These are some areas that fall spot bang in our expertise area. Lastly, I would say, anything else? That's it? Yeah, and Kerala was a good opportunity for us to look at because it ticks off some of the boxes that are areas of focus for investment.
Sure. Anil?
Thank you. Actually, have shared this several times, but my friend wants me to do again. So, ours is a tech-focused fund. It's an 100 CR fund, and as name suggest, we look, at a company or venture which potentially could be unicorn. That's aspiration we have, and we believe, entrepreneurs who are looking to raise money from us also have similar aspiration. As a investment, we do anything around uh, in range of $500,000 as a first check, and we can invest up to $2 million in company. So far, we have invested in 10 companies, fairly diversified, but in all these 10 companies, one thing is common, that they are leveraging technology as a backbone for their company, be it in a fintech or in a space of healthcare or a SaaS or consumer internet or AI, machine learning. We have a small portfolio, but fairly diversified. As a offices, we are headquartered in Mumbai. Also have office in Bangalore and in Delhi as well. And I have a small presence in London and also something to do in US. So very India focused, but with global perspective in mind. Thank you.
Thanks. Varun, so almost all of us know what you are as an entrepreneur, what you're doing, what as a founder, what you're doing. But as an investor, what is your focus?
Yeah, sure. Hi. I'm not qualified to be here as an investor because I'm not like the two folks who are sitting here. While I'm spending my time here, my heart, my soul, everything is in back of my offices of Corporate 360, where we're trying to make product and sell. I've come because at a personal level, I'm looking for a few areas that we want to allocate a small percentage of our profit and fund some startups. So I'm one among you guys. Many of you are running companies and trying to raise capital. I'm doing the same thing. We are all on the same boat. I've had a small amount of experience in terms of connecting with a few investors in Singapore and US to look at options when we wanted to explore raising capital. So probably I could share some experience there later on. We have taken $100,000 from our profit last year, and we thought of investing in small startups. We thought we wanted to put in 20 grand each into 5, so 5 startups a year. Last year I did 2, and the focus is any products that are complementary to us. So we are working on data analytics, data mining, data analytics, artificial intelligence, machine learning. Those are the areas that I'm focused on. My company has created a small predictive engine that by applying machine learning algorithms. So we collect a lot of data, and then we churn the data, we predict. That's what we do. So that requires a lot of skills around artificial intelligence, machine learning, NLP, data mining, etc. So those are the areas that I'm keen, because my objective is to sort of develop talent or develop ideas on those areas. Later on, I can acquire them into my company, or if it's an amazing idea, I want to be a part of it. So 100K fund available from our side, preferably 20K each into 5 startups, or if it's an amazing idea, we could kind of reorganize that 100K into 2 or whatever. But that's what we have. And what I look for is on those areas, and plus obviously the founders, the scalability, the typical, the game, what investors want. Besides from the typical investment thesis of, exit within 5 years or, this much of a return or anything. One of my objectives is also to develop talent, because you don't get a lot of people who are working around AI or NLP or machine learning. The good guys are already doing startups. The better ones are already too expensive. You don't get that talent. So I'm really hoping that, if guys are interested in working on those areas, come talk to me and we can work out something that, develop and see how that goes. Thank you.
Cool, that's helpful. So this was just setting the stage to for you guys to understand what the three of them do. Jumping on to the probably the first section of things on what you look for in a startup, right? Let's consider the scenario where a startup is coming and sending their pitch deck to you, coming and pitching in front of you. So if we can be very clear, crisp, and say these are the three things that I want to see in a startup, right? These are the three qualities. What would you say, Anil?
So, three things, huh?
Please. It can be more, it can be less.
So I'll make it slightly simpler. If it's just three things, it's a laundry list. When we invest, we definitely look at several, other parameters. But let's make interesting for, this particular moment. So we would like to look at three P's, right? One is people, which translates into team and background and all, right? Second, we would like to look at the product. When I say product, what it is doing, what proprietariness it has, what problem it's solving, and what kind of scalability it has. And the third P is a place. Place, since I had to come out with third P, so place is basically, what all places, this product and services can go. Meaning which, is it universal problem solving product service, or is it just a very niche? So since the option were only three, so 3P, proprietary 3P.
Yeah, so it's fundamentally the market which you look at as the third, if we can put it that way.
So basically, how large is the market,
Okay.
right? Market may be $1 billion, right? Potential addressable TAM, what we say. But this particular solution which is being considered, how big it could be in that addressable market. So there's no point, looking at a business which is just 100 crore in a $1 billion opportunity. Rather would like to look at something which is, scalable very fast.
Sure. Thanks. Mayurish.
3 P's and 1 M. And those 3 P's are people, market, and people again. The stage that we operate in, it's all about people. I would much rather, we are betting on people. You yourself, when we met, he was narrating about how many pivots he's had. The market, the idea is worth zilch if you can't execute on it. And there will be many failures, and I can promise you will fail. But we want founders who, when they get socked in the jaw, can get up again and have a go at it again. And we want guys who they don't believe in the word of giving up. Take any startup as an example. Barring a 0.0001% of successful startups that hit bullseye on their first idea, guys had to pivot, whether it was markets, whether it was technology, whether it was products, whether it was getting other team members on board. We believe founders should have strong ideas, but they should be loosely held, flexibly held. What do I mean by that? They should believe strongly in whatever ideas, thoughts, beliefs, a solution that they have, that they believe they bring to the market that nobody else brings, or they bring it better. But they should be flexible. He should not be so stubborn-headed that the market is telling him, you're failing. I am not going to pay a single rupee for your product. And the guy just goes on believing, hey, it's my way or the highway. That's a recipe for disaster. So he needs to have strong beliefs, but they should be flexibly held. It should not be held ransom to the way his brain is wired. He has to listen to the market, he has to listen to the product, and most importantly, he has to listen to customers.
So that probably brings in another P into the equation, which is perseverance. Yeah.
Perseverance, passion, call it what you want.
Great. People, market, and the product is what we have, Varun.
It's if you look at it, it's more or less the same thing, right? I mean, that's the basic fundamental thesis behind any investment. And Mayuresh explained about some of the qualities for people as well, right? Which is a very important point. And some of us founders and aspiring entrepreneurs, the idea is to build an attitude that that reflects what he just explained. You know, you get an idea, you don't want to get desperate on it, you don't want to get stuck on it, you don't want to get sticky to it. You got to have a flexible, intelligent attitude, not arrogantly intelligent. You know what I mean? And I've gone through all of that. I was one of them, like how you explained. It was my baby, and I talked to people, and I didn't want to. I didn't like many things. And later on, by committing that mistakes, I learned all of that what he just explained. So it's when they say people, you have to understand with the right sense what exactly the meaning of that. So how do you reflect your personality, and how do you engage professionally, and how do you accept, learn, and adopt, which is very critical. So I would say people, right? And do some research on what are the people skills required to be a good founder who could impress investors and allow you to develop your skills to work with them and grow, and then grow together, right? Second is obviously the market. See, at the end of the day, investments, investors, it's all hard-earned money, and we are here to make money. They are here to make money, and you are doing this out of your passion. But at the end of the day, money comes into the play. Money comes into the scene. So it's very important for all of you to understand the addressable market. Who are your buyers? Where are they based? How big is the market? And you got to have a clear head around that, which is very important, because when you want to raise capital, you're looking at taking money from somebody, and that money belongs to someone, and that person or that group of people is working hard or would have worked hard to make that money. So you got to get that right sense in your head. So addressable market, obviously P and M, and then comes your passion or perseverance, or some words I can't pronounce properly. Sorry about that. But yes, those are very very important things, right? So just chase, keep knocking. With the first two, once you have the first two fundamentals in place, then you're ready to go. So then keep knocking, just follow through.
Absolutely. So done with the direct question and coming to the tricky question. How do you measure this? We have people, we have market, we have product, right? Some are easier to measure, some are difficult to measure. So if I ask this question, there is a person who's sitting in front of you pitching his idea. How do you know? What are the metrics in your mind to understand if this is the right person for you? Let's start with people piece.
So you're all engineers, right? Or a large portion of them. Have you heard of Richard Feynman, the famous physicist? So he said, thank God electrons don't have emotions. Unfortunately, people do have. So it's a difficult task. There is no one quantitative measure to it. We're all engineers. We would love it if the world could be boiled down to quantitative measures. Unfortunately, you can't do that with people. So you have to spend time with them. You have to go back and understand what kind of a history he's had. Has he failed? If he's failed, how has he handled his failure? What was the genesis of him arriving at the product? And I mentioned this yesterday also. How do you measure passion? Passion inherently is a deep visceral understanding of the problem, the markets, and the product. And there's a very tight correlation between passion and your understanding of the product. Higher the passion, higher is your understanding of the product. So you just got to spend time. I mean, you can't escape this. You can't have a spreadsheet that you have 10 parameters and 9 out of them tick out and he's the right guy.
Yeah. So you obviously don't have a spreadsheet, but do you have biases? Do you think that this guy is from IIT? This guy might.
Of course, all of us, humans, emotions, absolutely. Yeah. There is data that suggests that whenever you interview somebody or meet somebody, your decision is made in the first couple of minutes.
That's right.
And most of them are derived on your bias has been confirmed.
Yeah.
Right? Yeah. So you have to consciously guard against those biases. You have to ask probing questions, and you have to consciously keep aside your biases so that you are not hearing what you want to hear. You're hearing what the person is actually saying.
That's right. So there is love at first sight exists.
Yes, absolutely.
Cool. So any comments on selecting people, your tips and tricks so that
You have girlfriend?
I had, now she's the wife.
Did you dated?
Huh?
Did you dated?
I have never rated it. Yeah.
No, dated. Did you did a dating? Not rating.
Oh, I thought. I thought he was asking about rating the
Of course,
relationship.
if you if you know
Yeah.
have a wife, then did you? But did you dated?
Yes, I did.
So what excited you to continue? And I think she is your wife, right?
Mhm.
Whom you dated,
Mhm.
right? So, right? So, see, it actually comes over a period of time, right? There is no science behind, why, I like somebody or why I don't like somebody. Somebody you would just want to spend time with someone, right? By just seeing, their features, or you think that they are knowledgeable, you want to spend time, right? Uh, it's said that, entrepreneurship can be taught, right? But the objective is that, is he or she can fall in that bracket. If the answer is yes, then you probably looking at a right person whom you want to back, right? There's no point investing a money. So one, we are not a passive investor, and neither we are micro investor who want to get into day-to-day businesses. However, we want to be a catalyst where we can help achieve entrepreneur's vision, right? It's very important to see whether a person, whether he or she IITian, non-IITian, commerce, non-engineer, right? I don't think that matters, because there are several examples where people are more successful not coming from this pedigree. So I think it will be wrong on our part to say that we have biases. We have a mix of entrepreneurs. We have invested in women entrepreneurs as well. We have invested in IITians also, and we also have non-IITians and IITians. I am a different pedigree. I think over a period of time, you build certain traits in yourself. You learn. As told by him, that basically lucky to have gone through 100 investment cycle, right? You learn. I got opportunity to learn 100 times, right? It is said that if you do something again and again, some people become master. I am not a master, but you definitely build certain traits, and that helps making certain calls, whether yes or no. In fact, we were also looking at your company, right? I haven't never met you guys, but still everything happened over phone call. Just a chance meeting with Arjun, and it happened, right? So we certainly look at certain traits, and if we have tick in box, right, then we definitely want to pursue further. So when we look at people, if that certain things matches, then we want to do deep diving. When we say deep diving, we want to look at product, we want to look at market, we want blah blah blah. But before that, we want to look at person. And I can say lucky to have gone, some 100 entrepreneurs helped me learn those trade secrets. Maybe more, not 100. It could have been thousands.
I took it from your LinkedIn. Okay.
Yeah. So to me, it's a simple thing. It's people. We're interacting to each other. So the first love at sight, the honesty, right? So I mean, the first investment I did last year, when the guy approached me, I asked him, do you have a house? He said, yes. I asked him, would you sell your house to build this product? And, right, and his answer convinced me, right? So, and he said yes, and would you pay my rent? I'm ready to do it today. You know what I mean? So you don't want to cheat yourself. If you believe in a product that you're building, then you will get funding, you will build it. Ideas, everyone has ideas, but you know, what matters is execution, the ability to execute. So the first thing, obviously, I look for honesty. I look for that you get a trigger in your heart when you meet somebody that if this person is a good person that aligns with your culture, your thinking, your attitude, and your goals. So I try to look for that. I'm not judging at all, in a way, but it happens naturally. So that is something that I look for, which is absolute honesty, right? Second is obviously, are you building a product that is solving problems that can be desirable by masses, where you can reach out, impact a lot of people, and make money. These are the two things that I look for, yeah.
Absolutely. Very interesting point that you mentioned.
We are in a trade where we have to read a lot. So we do our homework here. It's not that it's over a cup of tea, we like somebody, but have to read a lot.
Yeah. So,
करते हैं, थोड़ी मेहनत करते हैं.
1,000+ startups, that's the cost, right? Loss of health.
नहीं ये तो हो गया.
So folks, this is something, again, connecting honesty and the kind of homework VCs do before considering you guys. So this I've heard from some other investor in the group as well. So there is this thing called making up numbers, which many startups do. So you go with your revenue numbers and everything made up, not accurate. So just understand that these are the things that VCs can easily find out. If not at the first stage, at the second stage, they can always easily find out. So bluffing that or lying on that and getting found out is a huge negative marking on your people factor. So if you look at it, people is the first thing all the three of them said, right? So let's never do that. Always be honest, as Varun said. Now, just curious about this. So there is this two scenarios. There's who has built a good product, just like the other one, and but he might not be as sharp and shrewd as the other person. You have these two people. You have to choose from the two. Whom would you choose? There's the smart guy and there's the nice guy.
Yeah, he have a first choice.
The first guy is smart, sharp, and arrogant.
Yeah.
And the second guy is who?
He's nice. He's above average. He can get things done, but not as sharp and cut through as the first person. I didn't say dishonest.
That's a very tricky question. I wish there was one more point to that. Getting things done, so both guys can get things done, then I want both. But looks like the arrogant guy will do better. So, yeah, arrogance has a lot of meaning to it. In which way, right? So if you're intelligently arrogant, I'm going to add that word to it. I'll go with the first guy.
Horses for courses. As long as the arrogant guy, we are looking for an edge, right? So if that arrogance is going to empower him to achieve things, so there's good arrogance, right? I have the arrogance to go and meet the CM, go out on a limb and come out with some kind of a commitment. It takes an arrogant guy to be that confident. Yeah. A nice guy will always say, hey, no, how can I do it? I won't be able to do it. So it depends on what stage you are and what is the level of arrogance that guy has that is not going to tip over the startup. Great example currently hitting the headlines, Travis Kalanick of Uber. He achieved what he did, but it came at a tremendous cost. Yeah. So do you want an arrogant guy building something and then you make him take a backseat before the thing topples over? Or do you want a nice guy who doesn't scale it up and it never gets to the place where you have to replace him for being arrogant. So it's anybody's guess, but as I said, horses for courses. It's a very situation-specific answer that I would have for that question.
Cool. Got it. So, Anil, unless you want to add something to it.
I don't know. There's nothing to add, right? No good, bad, ugly. I would want to meet both of them. You never know that they may together may form a great combination, right? One brings sanctity, some brings arrogance. So why not? As rightly said, intelligence, arrogance, or whatever form, you do need certain kind of arrogance, right? Otherwise, as a CEO or as a leader, you may not be able to achieve certain tasks. You may fail. We have a good blend of all those kind of guys in our portfolio. So it's not that we select some and we reject some. I think need to look at what sector they are looking at. If it is pure services, I would probably go with second guy, right? Mm-hmm. I don't need arrogant guy, because the very first day probably he will kill the market with his arrogance, whatever form it is, right? I don't need arrogance. But I may need somebody which actually is looking to build different product, market, services, where arrogance may help, right? If I had to lead a team of 800, 900,000 people, you need different arrogance, right? So both have their importance, and would love to meet both of them. We have a good mix, so several examples. So.
Cool. Moving to the market and product piece, taking it together, how do you vet it? Is there a set of metrics that you follow? Is there a set of things like competition or the size of the market and things like that? What are the things that you compare against to understand the size of the market and how good or bad the product is?
So one, the market which get defined by promoter, and one is a substitute market which probably get ignored, right? Mm-hmm. So when we evaluate, we definitely would like to evaluate both, one absolute market and one replaceable market with some other product. If back of envelope calculation doesn't justify, then we probably don't want to look at, right? As I said, we want to look at ventures which potentially can be unicorn. And the unicorn can be only unicorn if there is a very large addressable market, right? And if entrepreneur is not able to have that vision, not necessarily he need to, but at least if the product which has been built, and if we can look at some alternative which in combination, then certainly want to. But if it is a small market, probably we may not be the right guy to invest.
Cool. Mayuresh, do you look at the competition of the startup as a metric to understand how much it can scale? Do you look at the competitors and the strength of the competitors, the number of competitors, etc., or how do you look at it?
Ideally, we would like to back somebody who's the first or second person in the market. Mm-hmm. Unless there is a niche that he's serving that the first top 2-3 players are not serving. But that's how I would look at it. I mean, we come in so early that there's no point in backing a Me Too product. Mm-hmm. The first wave of Indian startups were the copies of Amazon and Uber and whatever. The first wave is over. Yeah. I think just copy pasting what worked in the Valley is not going to work out anymore. You have to understand there's not much of a competitive moat for implementing what the US does in India. The language is the same. The economy is much more open than the Chinese. You don't have Google in China, so they can still afford to copy paste what happens in the Valley. You can still have a WeChat because WhatsApp is not allowed there. Facebook is very restricted. So competition is thought of only if it is serving certain niche areas where you can go neck to neck with him without running into face-to-face battles. But otherwise, we would back founders who are the first or second players in the market.
Cool. I'd love to hear Anil's perspective on that as well, because on the competition aspect specifically, because I've seen that from your portfolio, most of these are very niche players and very core technology focused players. How do you look at competition or lack of competition?
So when we invest, I actually shared this yesterday as well. The space or the kind of entrepreneur or venture we look at are largely something to do with futuristic business, right? There's nothing like that. Or something which is disrupting the existing way of doing business. Or something which is, totally identifying, new niche market. For example, we invested in a company which is in micro lending, and they are helping lending something in range of 1,000 rupees to 10,000. Right now, you might say that who want to take a loan of 1,000 or 2,000 or 10,000, but look at people whom banks doesn't look at. Look at people whom NBFC doesn't look at. Look at your driver, your maid, or somebody whose earnings are not so great, but if managed properly, he can always repay this kind of loan. And these loans are always in range of 15 days to 45 days, and it's a huge market, right? Just to give you some synopsis, look at the kind of network Ola has built up, right? And their payment cycle is 1 week, 2 week, 4 week. Now this driver who is solely dependent on this one form of earning, he need to fill his vehicle for all 7 days or maybe for all 15 days. Now what if he runs out of money on 10th day and the payment is coming on 15th day? How does he run his business? It's a huge market, right? You are helping an entrepreneur, a self-made entrepreneur, to run his business with a small contribution, right? So huge market. So if you look at, you say lending, it's there, banks are there, individuals are there, P2P there, but there is a huge chunk of market, large enough, which is totally unaddressed, right? I gave example of Ola because easy to understand, but otherwise they cater to totally different bottom of pyramid segment, right? So if you have a competition, and most of the time you yourself have gone through that cycle, you will appreciate that while you're building, while you have first 5 customers, it actually is challenging, to go from 5 to 50. And if you have a success, then you have many me too, right? New guys. And top of that, you are actually disrupting somebody's space. So those bigger boys also, today if you look at Patanjali, actually have made so much noise that every FMCG company, be it P&G, be it HLL, be it, named, they actually, going from all sides to attack, right? So it does in shared cap space, which was basically looking at intercity, right? If you need to go from Trivandrum to Kochi, what options do you have? So we thought, why not look at this venture, and nobody was looking at it, neither Ola nor Uber. We felt it's a large enough market, and India billion plus population, everybody travels, road conditions are improving, and all of a sudden one fine day Ola said, I want to address this market, single stroke, because you can't fight with a $1 billion company when you are building your market. So competition does.
Absolutely, got it. So moving on to the things that startups shouldn't do, right? What are the things? What are the most common mistakes that you have seen startups do while approaching you for a fundraising? Varun, if I can start from you. What pisses you off in a startup?
Actually, I had a comment for the previous point. Can I say it?
Please. Oh, please. Yeah.
See, product, first thing is about product. We got to look for an innovative product that solves problems and can be desirable by masses, right? So we look for a solution. But it's okay, in my viewpoint, it's okay to take an existing solution and improvise it, okay? It's okay to copy a solution which is already there and improvise it and create a new GTM strategy, go-to-market strategy, and sell it. As long as you have a clear case of differentiator, it's okay. We talked about competitors, right? So that corresponds directly to what I'm saying. If you know that a legacy business model is sitting there for the last 25 years, right, like our Infosys of the world, they've reached the mountain and they're there, right? After 2000, did you see another Infosys or TCS came up? Never. So, but they forgot to innovate. I have high respect for all those companies and founders, but they forgot to innovate. There was a lack of vision. You see guys who have built companies like them, like PayPal guys, eBay guys, what did they do? They continued innovating products that touched masses of people's life globally. Versus here, we have made a lot of billionaires from Infosys and TCS and all of them, and they invested in hotels and I don't know what product came out of them. We lost that opportunity, right? Two or three guys invented WhatsApp. The telecom companies, they were sleeping. They had the technology. They had the messaging system for so long, and they simply forgot to innovate. And three guys sitting in a small room invented WhatsApp, and now everyone is behind incubators and startups and everything. So what I'm trying to say is, always keep an eye open and innovate, okay? And so from a competitive perspective, look for ideas that are already existing, like what our Infosys leaders or TCS leaders forgot to do. Try to copy or try to find a solution to it. Okay, the AI is coming in. A guy sitting in California, working on a shop floor, sitting on his laptop, okay, and he bumps into an issue. His laptop is giving him trouble. He raises a ticket. That lands in a guy who is earning 60,000 rupees sitting in Chennai or Bangalore working in HCL desk. He logs in, he gets a ticket, he logs in, through remote connectivity, virtual connectivity, he supports it, right? Now what's going to happen? That job is going to disappear. An AI engine, an artificial engine will take on that responsibility and fix it, right? So when we were building billion-dollar business units to support, to create a business model called infrastructure as a support, they simply forgot to innovate AI. So a company like Amazon, they were a book company, e-commerce company. They built a business model called AWS, which is a $5-6 billion company now. They built a technology to support their own infrastructure. So what did they do? They took that learning and they made that into a product. We had 5 big billion-dollar IT services companies, had the best knowledge, had the best expertise, had the best manpower resources, and have been already supporting infrastructure, made that into a billion-dollar business unit across for last 20 years, forgot to innovate that. Who did it? Amazon did it. You see where the disconnect is? Now we talked about Ola, we talked about Uber, right? What we need to look at is, how do we become global innovators, not regional leaders? Ola is a copy of Uber, right? Flipkart is a copy of what? Amazon. There is nothing wrong with that, okay? They were at the right time, at the right spot, and they had a market. They quickly went in and they built it. But they didn't come before Amazon. Ola didn't come before Uber, right? So how do we invent that? How do we invent the Google? How do we invent the Uber? That is where we need to look at. So not just, India is a large market. We can invent for India, but we need to think beyond that. How do we become like them, like Elon Musk, right? What is he doing? So there's a huge cultural change that is needed. I have high respect for all the IT services companies, the leaders and everything, but I clearly sense there was a lack of vision in terms of being futuristic, while they had all these guys right in front of them, right? They had an exit, they made money, and they continue to invest in globally changing impactful products. versus, our Shibulal will go and buy hotels and, different things. That is where, the disconnect that I see. Now everyone is getting into the same thing. Now coming to the point, product versus competitive intelligence, just because a competitor is doing it, if you are able to improvise it, definitely it's possible. Okay, so that's my first point. And as a founder, what are the mistakes that you would do, right? When I started, I did 3 months of interactions with investors. Believe me, there are different kinds of investors. Okay, there are guys who've done a company, got into an exit, made a lot of money, and he's investing. So he knows the game. There are a bunch of school kids, college kids coming out of Stanford and MIT and all of that, join a fund, and they're desperate to get a deal, right? There are a bunch of guys like that. Then you have angel investors, I don't need to explain what kind of people they are. Then you have sequoias of the world, who are large VCs, right? Then you have family funds, rich family funds. So for each of these segments, dealing with them, you have to first identify what kind of people they are, right? And then you have to prepare yourself to deal with them accordingly, okay? I did that mistake of not dealing with it. When I bump into situations with them, I realize, each one of these categorical people are different. How they think, their goals, their alignment are different, right? How they treat you are different. So you got to first have that basic homework, how are they? And then try to adopt, try to kind of personalize accordingly and try to deal with them, okay? That is number one. Number two, there are a lot of dishwashers out there, right? A lot of guys are getting into the startup scheme of things. And they will come in and they will have no value add to you. They will be a part of a fund. And believe me, some of the investors also can be really, really arrogant. I've gone through it. I have had a guy who asked questions that didn't make any sense to me at all. And he asked me a question that it looked as to, he expected me not to answer. And I said, I'm not interested in you. Right? So be honest. Don't give away your dignity, but be intelligent. Okay, at what stage? I'm a revenue making company. I'm making more than $2 million in profit. I'm in a stage where I'm okay to say those things because I'm okay. So depending on your stage, at what level you have to tweak your approach accordingly. So these are some of the things that I can share. And at the end of the day, like what Jofin said, never jack up things. Just be yourself. Totally be honest, be humble, be yourself, and be very honest. Don't cheat yourself. And these are things that I can share. Sorry, I took a bit of time.
No problem. So I think we have hardly. Huh? Yeah, that's right. So quickly on. Sure.
So this is a hot button issue with me. But that aside, these days with a lot of job layoffs and what have you. So if you can't do anything, you're an entrepreneur apparently. But if you're an unsuccessful entrepreneur, then you turn into a VC. But take it for whatever it's worth. But what really pisses me off, this insane, crazy focus on valuation.
Okay.
If you want to make money, startups is not the vehicle. Go play the stock market game, go gamble on horse racing or what have you. This is a job not for the faint-hearted. This is a 7 to 10 year commitment. Build it because you believe you have a solution that does not exist in the marketplace. Build it so you discover yourself as a person. Build it so you build perseverance, passion for the product. Most people put the cart before the horse. And when the incentives are so misaligned, then all the outcomes that follow are wrong. So you see all these PR articles, our friends from Let's Venture are here, but you see all these stories in your story, in VC Circle. When you go after the valuation game, your focus is how do I get more PR? How do I bump up my revenue? How do I bump up the $5 million that I got and claim that I got $10 million? It's all misaligned. Focus on the product, build it, talk to your customers, take the feedback, build great products. Mm-hmm. If all that happens, valuation is a fine, natural outcome of doing all these things. But don't focus on the valuation.
All right, that's great insight. So again, almost everything connects back to to being honest and very straightforward, right? So build a business, not a funding engine, right? So Anil, what pisses you off?
Can you repeat?
What is the thing that you hate in startup pitches?
I don't hate anything. See, we are in a business which have both a mix of success and failure. And it's a business of trust, right? Entrepreneur who comes to us is also putting a lot of things at stake, by raising money. And there's a trust, which he also built, across value chain. When we invest, we also trust there's nothing, right? We are writing a check to someone who's just out of college, writing to a check to someone who's just starting. So even for us, it's a very, very risky, right? Entrepreneur is risking, his career. We are risking, money. So it's same either way, right? I think what we don't like, and it's true also for entrepreneur, I think one is dishonesty, right? Second, I don't like people who are not in position to take decision, right? Because in startup, the window is very small for you to do something. And especially if you're in technology business, which changes very fast. Several examples have been shared by Varun. I need not have to repeat. Your lack of, not taking decision can impact a business a lot. So dishonesty. So anything which you can put it into negative bucket.
Absolutely.
Right? If you want me to give that laundry list, I can give. But one which I don't like is if dishonesty. Of course, if you are fraudulent, nobody wants to invest in these two characteristics. You can still cover for lack of decision, but that also one which because we are not in micromanagement. We basically want to walk with you, but not make you walk, right? If I make you walk, basically I'm running your business. And if you are not able to take decision, then it does impact. So
Right.
otherwise list is long.
All right, got it. So there are quite a lot of other stuff as well, but in the interest of time, I guess we can hardly take 5 more minutes.
Bear in mind you are standing between them in the match.
That's right. I'm already. Yeah. Let's just wind up. Let's give time for a couple of questions from the audience. If you have anything, quick show of hands, please.
Hello. So we are very beginners in startup, and we are just starting up, and we have a very long list of doubts, and I like to clear one simple doubt, and that is, what do you look for when you invest? That is, whether the product is innovative or it is a very new product that is just invented. That innovation and invention is very different in my perspective. That innovation means that there is some product like that's existing, and there is some improvements that have been done to that product, then that is hitting to the market. And inventing in my perspective is building a completely new product. What is your perspective in inventing in those? Investing in those?
It doesn't matter, right? We can look at the dictionary meaning of invention and innovation. Objective is that are you able to commercialize what you have, built? Are you able to scale? I don't know whether you were yesterday, were you there yesterday,
Yeah,
but I shared one thing that invested in a company, $1 million spent, and the gentleman came up, a lot of innovative, products, 150 patents. What I do with that, right? I'm not in a business of collecting patents. Neither you as an entrepreneur are in a business of innovating but doing nothing. So I think let's not get into the literal dictionary meaning. I think it's more important, are you able to commercialize, right? In my view, your success will be when your business start getting funded by your customers. and not by investors, right? Till time you are getting funded by investor, I think it's not a success, even if it's $1 billion. The day you start getting funded through your customer, I think that's when you can say that, yes, I have done something. So look, how you can commercialize, and if you can help addressing large enough market. I don't think raising money is the only motive. As an entrepreneur, if you can build business, even if small, without raising money, I think that's more, I think, fruitful and fulfilling, and I actually call it a true success, right? You raise money because there is an opportunity large enough. If you need to look at that, then you need different resources. Then where we come in picture. Otherwise, there are many businesses where you can actually live a much better, comfortable life than much larger businesses, right? So I think we should get that one thing clear from mind. But from your perspective, if you're able to commercialize, and if you're able to address large enough market, I think that's more important than innovation, invention. I think one word which you should keep in mind, are you able to disrupt? If you're able to disrupt, I think you will get answer to all your questions.
And we have a request for you. We have a huge number of doubts, and
Sorry?
we have a very big doubts that we are just starting up, said before. So can we have an offline chat?
Not able to get it.
So he wants to, he has more questions. Can he meet you offline, is what he asked.
Why not, yeah? As long as you're able to buy coffee for me, I have no problem. I'm willing to date you, as long as you're able to buy coffee for me.
Yes, please.
Mine comes with the coffee and also some resourcefulness from your side. These days, all information is available everywhere. I would like to have seen you done some of the groundwork rather than throw those pile of problems at me and say, hey, solve it. We are not in the spoon feeding business. We are in the supporting, advising, mentoring business. I hope you understand the difference.
Hi guys, I'm part of Cosmatch. We are a non-profit crowdfunding platform. My main question is about pitching. I found that when we pitch using a story, that resonates better with people more. But what do you guys take in? The hardcore data of the company, or how it's presented in the pitch?
So translating the question, do you value the good way of presenting it, or do you actually value the hardcore numbers and things behind it?
I think that's a no-brainer. Substance over form. It has to be the substance. Simple, straightforward answer.
So same question too. Do you have a girlfriend?
No, I don't.
No?
No.
If you had girlfriend, you would have certain things in mind, right? She is beautiful, she is intelligent,
Yeah.
she is, respectful.
Yeah.
Right?
Well,
I'm giving you, I did not have to say that what I'm looking, right? You have answered to all your questions, right?
yeah. Well, in our case, we are working with non-profits all the time. So our main.
I can tell you one thing. If you are not able to grab attention of your whomever in first 30 seconds,
Yeah.
then story is lost.
Okay.
Whether you have to jump, act like a monkey to grab an attention, do that. If you need to throw numbers, right? You as an entrepreneur have to take a call, what you have to do to seek that one attention, right? Nobody on earth can teach you, right? I can tell you one simple example. When you were a child, you couldn't walk, you couldn't speak, but you did all those things to grab attention of your mother, right? To get fed, right? Doesn't matter what form it was, right? We have all those quality to get that one attention. I think identify, do your homework, whom you're talking to, and if you do justice to that, I think doesn't matter whether it is a number or if it's a story.
Okay.
Right?
Yeah.
But if you are not able to grab attention on a recipient in 30 seconds, I think waste of time.
Okay. Thank you.
So the great
So
presentation.
I asked you one thing in 30 seconds. Do you have girlfriend? I got your attention.
So Yeah, please.
Hey, so the takeaways, I'll just put it in a different way. The first question and the second question. A startup is equal to exit, and that is not necessarily has to be that way. Startup can be run by your own revenue generated by the customers, as he said. Okay? So that triggers back to the point which is validation. So what does that mean? It means when you build a product, try to get some traction. Validate it by customers, get some customers. That's a first object or parallel object together with other things that you're doing. Now, this is not in the case of hardware or robotics or any sort of startups. That's different. They need to get capital to get their components together and build it together and everything. But in other sense, try to get some traction, okay? A startup can be made into a company by running a company. If you built a product which you get customers gives you revenue, you can continue running a company, okay? So you need to keep that also in mind. And I think that's what I want to tell both of you.
Cool. So we can take one more last question and no one? All right, great. So thanks, gentlemen. It was great talking to you. We have already run short of time. Otherwise, I have a ton of questions again. But then key takeaways, guys. We talked about what these guys want, what an investor wants from a startup. It's pretty straightforward. It's pretty simple, and it's interesting that all the three of them had the same things to say, right? It's people, product, and the market, right? It is always the three of them, and it's again interesting that all the three of them again and again said about people, the factor that people is a very important thing in the equation. Then we heard about what we shouldn't do while going for or what we shouldn't do as a startup to make it fundable, right? Or to make it successful. So it's the honesty piece. Just don't lose it. It's the decision-making power. It's the smartness. It's the intelligent arrogance that we need. So all these are key takeaways. I'm sure all of you might have had something to take back to your ventures, to your building the startup story. Thanks a lot again for the time. We truly value it. Thank you. Thanks a lot.